Hello everybody, and welcome to the channel. I've been doing a lot of interviews lately. Honestly, I've been doing interviews because I've been so darn busy I haven't had time to actually sit down and make formal videos. So this has been kind of my lazy way to make videos and keep content on this channel. But I think it's also beneficial because maybe not everyone, it's good to have a wide range of topics and experts who can talk about, these different topics that we have on the channel. So if you've found yourself on the channel, you might be thinking about moving to Costa Rica. That's how most people end up getting onto this channel. You'll see the content's going to start to take a little bit of a shift. I'm also, we're going to be working in Panama, so I haven't officially announced that. But so yeah, there'll be just more moving abroad content, moving to Central America kind of content. So if that's what you're interested in, especially Costa Rica, you can definitely check out the rest of this channel. If you may know, I have a relocation company. We do one-on-one work with our clients, scouting trips, retreats. We've got the podcast, and we've got a lot of stuff going on. So if you're looking for information on that, there's going to be links down in the description below for you. If you're looking at actually taking action on something, then that would be a good time to set up a call, only when you're ready to take action. If not, I have so much free information out there. Go consume that first. Okay, so I'm excited. Here we have Randall. We've had Randall here on the channel before. I'll also have a link to that below. We actually did a webinar together about taxes. So taxes while living abroad. So that had a lot of really good information on it. So if you're interested in kind of taxes and how that could affect you, moving abroad, then definitely check out the webinar. That's in the link in the description below too. But today I really did want to cover a topic that I do think is important because a lot of my demographic or clientele that I work with do fall into this category. So this would be remote workers. So how are you going to handle taxes as a remote worker, perhaps living outside of the United States? You guys just do the United States, right?
That's correct.
Exactly. So this is for U.S. people working remote, living in another country. Hopefully you guys will be pleasantly surprised by the information. But yeah, we thought this would be a really great topic. So thanks for coming on again, Randall. Maybe you want to give people a little background about you and what you do, and then we can kind of get into maybe some things that you think that remote workers should definitely keep in mind as they're, going to be living abroad.
Absolutely. Well, thank you for having me once again. My firm is Tax Samaritan. We are a tax firm that focuses on U.S. tax compliance for Americans that live and work abroad. We also do a number of other related services, tax planning, tax advisory, and so forth. We've been in business for over 20 years and have many clients that have relocated to Costa Rica, working online. Also many retirees as well, enjoying life in Costa Rica. I'm jealous.
Yeah, you have to come down for a visit sometime.
Yeah, absolutely. So as far as relocating to Costa Rica, one of the key areas that U.S. citizens should be aware of is that you continue to be taxed on your worldwide income regardless of your residency. Even though in Costa Rica you're working online, you may not be taxed on that income. This means that expats in Costa Rica must continue to file their Form 1040 annually, reporting all their income and foreign earnings. Even though there's not a comprehensive tax treaty between the U.S. and Costa Rica, there are many benefits available that can mitigate double taxation, such as the foreign earned income exclusion and the foreign tax credit.
Yeah, so some of people who might be on my channel might know a little bit of my background. I did used to work for a tax company that specialized in expat taxes. And one email that I would see in the inbox was, I moved to Thailand, I moved to this place, 25 years ago. I had no idea I was supposed to keep filing taxes. What do I do? So that's why, on this channel, I don't want to see people in that situation. What would happen in that? I know what happens. Can you explain to everyone kind of what would be the procedure in that circumstance? Because maybe someone's reading this right now and they moved a while ago and they were like, I was supposed to file? That because I saw that time and time again in the email inbox, and I'll bet you it's something you guys get too. So what is this procedure in that case?
Yeah, absolutely. That's something that we do receive in our inbox a lot. We get a lot of calls about, oh my gosh, I just heard about the FBAR, or I just heard from somebody else I was supposed to continue filing my return. What do I do? Am I going to be in trouble? Well, there are options to get back in compliance. And for expats who have not filed U.S. tax returns while living abroad, have not filed FBARs and so forth, there is a thing called the IRS Streamlined Filing Compliance Procedure that can help you become compliant without penalties, provided that you meet the eligibility criteria. We find that most taxpayers do meet the criteria, so this is definitely an avenue to get caught up without fear and to mitigate the extent of penalties, your penalty exposure.
Yeah, so how many years do they usually require that someone's going to backfile on that?
Great question. Usually the 3 prior years of tax returns, including your current tax return, as well as 6 prior years of FBARs if you had an FBAR filing requirement.
Okay. So some people that are watching may not really know what an FBAR is. Would you mind kind of telling us about what the FBAR is and what someone would need to do?
Great question. FBAR stands for Foreign Bank Account Reporting, otherwise known as the FinCEN Form 114. And so expats must report foreign bank accounts that exceed $10,000 in the aggregate at any time during the year. And it's a compliance requirement. It's an information disclosure only. It doesn't trigger any tax liabilities, but it's important to do so that you avoid penalties. A very common misconception is, well, I have 3 accounts. None of them exceeded $10,000. So it's not looking at each individual account whether it meets that threshold. It's all the accounts in total. So once the aggregate totals over $10,000, it's going to trigger the FBAR filing requirement.
Yeah. Yeah, I know that I've had people say, oh, is that going to be taxed? So I think the government just wants to know that you have over 10 grand in another country, and they're just nosy. They just need to know all that, I'm guessing, right?
Yeah, absolutely. It's came about in the 1970s to root out or identify tax evasion, primarily in the drug industry. But obviously, it loops everyone that's an expat overseas potentially is having this filing requirement applicable to them.
Okay. What if we run through some scenarios? Would that be okay? So let's say I'm Sarah. I just moved abroad to Costa Rica, specifically, and I'm not a resident. And I'm only going to be here for 6 months. Is that going to affect my taxes? Let's say I'm moving here as of now in 2025. I'm going to be here for 6 months. I'm going to be back in December. Are there any major changes to my taxes in this case? I'm not a resident, just kind of here for 6 months.
No, your tax filing requirements are going to be exactly the same. What's subject to taxation is going to be exactly the same. Your worldwide income. As far as potential tax benefits like the foreign earned income exclusion and the foreign tax credit, because you're only residing in a foreign country for 6 months or less, you would not be eligible for the foreign earned income exclusion, so you wouldn't have that benefit. And I would assume it's very likely you're not paying any income taxes to Costa Rica either, so the foreign tax credit would not be applicable either. The only potential exposure may be international disclosures that you may need to do, such as the FBAR. So if you open some financial accounts in Costa Rica or elsewhere, those filing requirements may be triggered.
Okay. And then what if I spent a whole year instead of just the 6 months? Like I came January 1st, I was here till December 31st of the whole year. Would anything change?
Yeah, potentially you may qualify for the foreign earned income exclusion so long as you spent at least 330 full days in a foreign country such as Costa Rica. In other words, to qualify what they call the physical presence test for the foreign earned income exclusion, you must have spent 35 days or less in the U.S. for any reason.
So what benefit? Like if I qualify for that, what's my benefit? Like, do I get a break on my taxes or?
Yeah. The foreign earned income exclusion allows expats to exclude up to $130,000 of foreign earned income from U.S. taxation, and this is for tax year 2025. This applies to earned income such as wages, salaries, self-employment income, basically any income earned for services performed in a foreign country, physically performed in a foreign country.
Okay. What if I spent I spent 60 days in the U.S., but I'm a resident of the foreign country? Is that another way I can qualify for the foreign earned income exclusion?
Potentially, absolutely could qualify for the bona fide residence test, and it's less quantifiable as the physical presence test, which is easily measurable. But if you're a resident of a foreign country and you have been resident for at least more than 1 year, it absolutely may qualify for the bona fide resident test.
Is there any other ways that I could qualify, or are those kind of the two main ones?
Those are the two tests, the physical presence test and the bona fide resident test, yes.
So that'd be good. So anyone who's working remote, if you're going to be outside of the U.S. for that certain amount of days that you mentioned, I think what you said, 35 days?
35 days, no more than 35 days in the U.S.
Or if you have your residence. So, for example, Costa Rica first, most people get temporary residency first. They'll hold that for 3 years, then they'll become a permanent. I guess if they had their temporary residency for at least a year already, do you think that would still qualify them for that, even though they're just a temporary resident? Maybe they haven't gone over to their permanent residency yet?
They may not qualify for the bona fide resident test, but so long as they spend less than 35 days in the U.S., they would qualify for the physical presence test.
Okay, that'd be good. So what are some other things that could help? So we got the foreign earned income exclusions because they've stayed out of the U.S. They're going to get a break on their taxes. Okay, we know that if they hold the money over 10 grand in their accounts in a foreign country, they're going to have to file their FBAR. What would happen if I lived in Costa Rica, I opened up a corporation here, and I have like a full business? What do we do in that case?
That's a great question. That definitely expands the complexity of your tax filing. So if you open a foreign entity for your business, or if you're using a foreign entity to hold ownership of your residence even, it's going to trigger what they call foreign corporation reporting on your U.S. tax return on the Form 5471. And it's akin to filing a U.S. corporate return. So it does add a significant layer of complexity to your return. It's something that you would definitely want to engage with a tax professional to make sure that it's done completely and accurately. It's not as straightforward as a U.S. corporate return. So you want to make sure that it's accurate and complete. With a lot of these international tax forms or information disclosures, the IRS potentially could be very punitive if something's missing, or I's not dotted or T's not crossed. The potential for the IRS to reverse the filing of your return, even though you have filed a return on time. If it's incomplete, the IRS could deem your return as unfiled. So it's something that you might be very cognizant with these complex forms such as foreign corporation.
Yeah, like personally, I wouldn't recommend anyone do this on their own. Like if you have to file a foreign corporate return, the FBAR more or less, depends. Like I wouldn't personally. I don't do it on my own. Let's put it that way. You mentioned timing, so I know normally the tax deadline would be April 15th. Are there any special exceptions for people that live abroad, and what do those deadlines look like?
Yeah, so absolutely, the normal tax filing deadline is April 15th. For all taxpayers, if you have a tax liability, that's always going to be the payment deadline. The payment deadline is always going to stay as April 15th. There's no extensions applicable for paying your taxes. Bummer, right? But if you're residing overseas on the tax deadline of April 15th, you do have as an expat an automatic extension to June 15th. Just like any other taxpayer, you can also file an additional extension with the IRS, which is also automatically approved if you file it, and that's until October 15th. But again, keep in mind, it's just an extension or tax filing deadline, not your tax payment deadline.
Oh yeah, and if you're like me and sometimes you still don't got to get it together by October 15th, I remember I've had to file for the December 15th extension before.
True. That is an additional extension that's available. That is not an automatic approved extension, even though I've never seen one get declined. There's that is one that has to be mailed to the IRS to request.
Good times. Yeah, I'm a little bit more organized this year. I put myself on a payroll. So actually all my taxes I think of last year should already be paid, so I don't have to. Maybe I'll even get a refund. Let's see. This might be my first year ever having a refund, but I've done my own. I've had many of my own tax mistakes since moving here myself. So I do recommend people consult with an advisor. Like even when I first moved to Costa Rica, I was, well, even as a remote worker, even when I started this business, I started it was just self-employed, and the taxes killed me. I was on a payment plan with the IRS for a bit for that one. I was like, where's my, I don't know. I bought land with it. I don't have it. So good times. That's all taken care of.
It happens. It's normal. It's not something, to fear or bury your head in the sand. If you have an issue, just address it, take it one step at a time, and those things will pass. Just address them. Yeah.
Totally. So my advice for people who are maybe even like getting into the remote work field, if you're a self-employed, or if you're like trying to figure out how you want to set things up, like right now, LLC or make it an S corp or whatever it might be, definitely talk to an advisor, because I didn't when I first started, and I don't know, just thought, oh, it'll be fine, and I made some big mistakes in that. I mean, everything's, like I said, got paid, but I probably could have saved a lot of money if I had maybe consulted with an expert prior, and told them kind of what I was doing in terms of remote work, because sometimes it's not as clear as someone works for a company and it's all taken care of. So I would say if you're kind of working on your own or as a contractor, that would be something that you definitely should talk to an expert on to make sure that you don't make any big mistakes, or that you have things set aside for whenever tax time does come. And then some people are just working for a company. Okay, maybe I'd like your opinion on this. I don't know. I have some clients that will talk. They say, oh, well, I've talked to the company that I work for, but they're afraid about potential liabilities of me living abroad. So I'll tell them, no, in Costa Rica, you're not going to be taxed as long as if you're not employed in Costa Rica by a Costa Rican company, if you don't own a business, they're not taxing your remote income. But I do notice that, every country's different, and these companies can be kind of freaked out almost by like, oh, we don't want to be liable with blah, blah, blah. So sometimes I have some clients that run into that issue just with their company not being educated. They think that they're now going to have to do something extra or something special. But I really just try to explain to them, like, no, you're really just going to file as if you're living in the U.S. for the most part. And you might even, again, maybe you could qualify for the foreign earned income solution and get a break on those taxes.
Absolutely. And that's something very common. Companies are fearful of running amiss of the regulations of another country, and oftentimes as a result of that, we see those employees that are moving overseas but continuing to work for the company is going to reclassify them as an independent contractor. And so if that happens and you're treated as being self-employed, you still qualify for potentially for those same benefits, the foreign earned income exclusion. However, you just want to be aware that it will trigger self-employment tax, which is Medicare and Social Security taxes. So that's an additional layer above standard income taxes, and that's something that's going to be applicable. Even though you may qualify for the exclusion, you're still going to have those Social Security and Medicare taxes layered on top of any tax liability that you may have.
Totally, yeah. I definitely owed that. Yep. I'll tell you that off the air one day. I can tell you that fun story.
It's always a fun story. Unfortunately, it's a story we hear over and over. It's not something that most taxpayers plan for, and you discover it after the fact, and you're like, oh crap. I didn't plan for this.
Exactly.
At all. So it's good at least. Hopefully all your listeners here, at least you're aware, and you can plan and set aside, funds, preferably pay quarterly estimated taxes, because the U.S. system is a pay-as-you-go system, so it's a good idea to take that self-employment tax portion quarterly, so you're not getting that shock at the end of the year that you file your tax return, and that oh crap moment, I owe this, what am I going to do?
Totally.
It's better to, yeah.
I'm on a payroll.
Plan for it.
I'm good. I'm on my own payroll. I don't trust myself anymore. Every year I was like, no. Let's see, other questions that I had for you. Well, I guess Social Security is kind of a hot topic right now, that's for sure. I have a lot of clients that are definitely concerned about it going away, so that's a whole nother can of worms. I'm like, should I be paying into that still? We'll see.
When I was in college and graduating college and had my first job, even back then, I won't say how long ago that was, but that was a few decades ago. Even then, they were talking about, oh my God, Social Security is underfunded, there's not going to be money, and I was thinking even at that time, by the time I retire, is Social Security going to be around? So that's been a continuing conversation for decades.
Mm-hmm.
I don't know. It's managed to stick around this far, so I don't see anything changing with that.
All right, well, keep paying into it then.
All right.
So
what can you do? You got it.
Exactly. So what else? Okay, are we missing anything? So again, we should think about if someone has if they have a corporation let's say in Costa Rica, we'll keep using Costa Rica as our example. Let's say they have a foreign corporation here in Costa Rica. Maybe they bought their house under the corporation. Some people might buy a car under their corporation. If you want to qualify for the residency, I don't do that, just so y'all know, because but some people do buy those under corporations for liability purposes. In that case, it's kind of a dormant one, but you're still probably going to have to file that, for the U.S.
Mm-hmm.
Others may have an actual full functioning corporation. Maybe I have clients who have bought restaurants or, started have an ATV business or started businesses. In that case, they're going to have to do the foreign corporate return. Is that just in that case, from what I think I remember, is that the U.S. is going to look at what that person paid in Costa Rican taxes, and then they're going to either, are they going to take that into account? Are they going to take that into account and not double tax that?
Absolutely. For the foreign tax credit, taking into account the income taxes that you pay to a foreign country, such as Costa Rica, that's something that's factored in to your return, whether at an individual level or at a corporate level if you have a foreign corporation. So that's something that you want to account for and share with your tax professional.
Perfect. Maybe even being employed. So, for example, in Panama, I noticed there's a lot more of actual employment opportunities for people from the U.S. moving to Panama, whereas Costa Rica, it's a lot harder. That company's going to have to sponsor you. They're really going to have to prove that you are so specialized and that they could not find another Costa Rican to take that job. Like, they're very, very particular here, which I do appreciate. Panama, it seems there's a lot of foreign corporations in Panama. It's just a different business environment from what I'm observing. So perhaps let's say if someone's legally employed in Panama by a company there, then they're also going to be kind of factoring this into their taxes in the U.S. kind of the same way as if they had their own corporation. Is that right?
Absolutely.
Cool. Anything else that I'm missing? I mean, we got FBAR, foreign corporate returns. Anything else that someone should maybe, possibly being able to qualify for the foreign earned income exclusion? Anything else that someone should really be aware of if they're working remotely, or I guess even starting a foreign corporation in another country, or working legally, being employed in another country?
Yeah, another area that's often overlooked is state tax considerations.
Yeah.
Unfortunately, some U.S. states may still consider expats as residents if they maintain ties, like a driver's license or voter registration, potentially requiring state tax filing and still being treated as a state tax resident. So if you're planning a move to Costa Rica, it's very important, depending on what state you're moving from, to consider severing state residency. Or changing your state residency to another state that's perhaps not as restrictive or optimally doesn't have any state income taxes, like Nevada. That way you don't have any ongoing state tax obligations. But it could be a complex area requiring careful planning before your move to Costa Rica.
Totally.
As far as common mistakes to avoid, obviously we touched on it a bit. Failing to file a U.S. tax return is a common oversight that can lead to penalties. So being aware that, hey, I still got to file tax returns even though I'm in Costa Rica or Panama. Again, not reporting foreign bank accounts via the FBAR can result in significant fines. Given the high audit rates for expats, so that's something to be cognizant of as well. And making sure that you're correctly claiming the foreign earned income exclusion under the physical presence test or the bona fide residence test can be a huge benefit for reducing your tax liability.
Yeah, that's good. Now, what would you say would be some of the major legal repercussions that someone could face if they didn't file their taxes? Have you seen anyone face like major legal repercussions?
As far as criminal repercussions, those are very, very rare. I've seen that maybe twice in nearly 30 years of practice. That as far as penalties, yes, I've seen potentially the penalties can be just egregious, financially devastating in the most significant cases. And those significant cases, it could be potentially it could be anyone, not necessarily a billionaire that the IRS wants to make an example of. It just could be anyone if it's left to linger for a period of time. If the IRS is contacting you for notices and you're ignoring them, the penalties, the exposure that you have, the risk, it will tends to increase over time. So that's a common mistake as well is hoping, ignoring it'll disappear, address it, and then move on with your life.
Totally. Well, cool. Now maybe at the end here, if you want to give us a quick little summary about what your tax firm does. I know we've covered this in the last webinar, but maybe just for people who aren't going to watch that webinar, who now have hopefully gotten some good insight from you on this topic, and I hope that everyone's found this to be helpful. How do you guys kind of step in and help with these kinds of things? Like what services do you guys offer, just so other people have that idea?
Sure. So our firm, Tax Samaritan, our goal is to bring about and help U.S. taxpayers have peace of mind with their U.S. taxes. So whether that's helping with tax compliance, tax preparation of your U.S. tax return, whether it's a simple return, an individual return, or you have more complexities such as the foreign corporation. We can help you with that. We also can help with tax resolution. So if you have tax problems with the IRS, whether you're dealing with IRS collections, you have an audit, or you need to appeal something that's already been assessed, we can assist in those areas as well. We can help with tax planning, tax advisory, financial planning and wealth advisory. We have a wealth of services and other resources that we can help you out in all these areas related to taxes and financial planning.
Well, perfect. Well, for everybody watching, I will have ways to get in touch with Randall down below in the description. And I would say I appreciate all of your information. And for those who've tuned in, I hope that you guys learned something. What I like from this channel is I hope that people can come to the channel, learn something, and then if it sounds like someone's going to be moving forward with a move or a scouting trip or anything, I have lots of information on that. We're always happy to guide you there too. And yeah, I appreciate you being here. So thank you so much for sharing.
Thank you for having me. Appreciate it.
You're very welcome.